This morning, USDA said we sold more grain. We had a sale of soybeans this morning, and we had a sale of corn this morning. So let's take a look at what we had. On the soybeans, the buyer was China. They bought 2 cargo loads, 132,000 tons worth. And corn went to Mexico. They bought 125,300 tons. Well, you combine that with the national crop condition ratings that came out yesterday, and the markets have been on a bullish run here this morning. Let's say on the crop condition rating, we had corn going down 2 points yesterday to 60%. Soybeans went down 1 point to 56%. Cotton, though, went up by 4 points this past week, up to 71%. Good to excellent. Well, let's see what's going on here. Let's go to the corn board. And with our quotes provided by Bar Chart, we are trading a little higher. Well, in fact, they're adding to it now. Now we're 7.5 higher at $5.43 per bushel. And even that, believe it or not, is over 2 cents off of its earlier high this morning. Meanwhile, in the soybeans, they're putting quite a day together. Don't know if they can hang on to this or not, but it's quite an adventure. November soybeans now at $13.27 1/4. That's 34 1/4 cents higher right now. They really leapfrogged right over that $13 benchmark and didn't even look back. Well, let's look at our wheat, and wheat has been going the other direction this morning. Sometimes the pressure is worse than others. Right now, Chicago December down 2 3/4. We're at 7.30 3/4 per bushel. In that Kansas City market, we have December dropping by 3 cents at 7.14 1/2. There for a while this morning, it was actually a little higher. Spring wheat in Minneapolis has December a 1.25 higher at 9.07 per bushel. In the cotton market, you have new crop December 5 points lower at 93.31 per pound. And checking out that canola market today, we have November futures. Wow, $13.20 higher. Yet that's in Canadian currency, and it's priced at $8.8930 per metric ton. Big jump there. Brian Hoops joins us now. He's with Midwest Market Solutions. He's in Springfield, Missouri. Well, you don't see this too much here lately, where you have a big up day in the corn and especially in the soybeans. You know, you and I had talked about the chart patterns here on the soybeans a while back, where they broke out on the downside of that sideways coil. But now it looks like they're trying to climb back up to where they had been before. Brian, what do you make of that?
Yeah, good morning, Marlon. Interesting day. You know, we were on yesterday morning talking about an overnight rally and how that rally probably would fail with the higher dollar capping the market. And the market did not fare very well yesterday after a higher opening, but just a reverse of that trading pattern today, where we had overnight markets higher, and then we were able to add to the gains and extend gains in corn and soybeans. So just complete reversal. The dollar has been weaker, and that's allowed a host of commodities to have a pretty good rally, including crude oil. The metals markets are rallying. So a lot of outside influences here, giving us some strength in the grain markets, and we're starting to see a little bit of buying interest. So it helps to heal some of the chart patterns that you talked about, with that wedge pattern being broken. You know, we set off a lot of sell stops and had a sharp drop last week in the bean futures. I think from Tuesday to Friday, we lost $1 in the November futures alone. So we're certainly oversold and ready to have some sort of a bounce. And today's move, a 35 cent move, pretty nice recovery, and gets us back into some resistance points, gets out of this $13 range where demand has started to pick back up, get us back into the 28 to 35 range. We'll start to find a little bit of resistance in this area, I think.
So is this a golden opportunity to add to some new crop sales if you have to sell some at harvest time, or would you be more patient here?
Yeah, you know, I think you need to be a little patient in here. You know, hopefully you've had a chance to make some sales of both corn and soybeans at higher prices when those were offered. Especially, you know, talking with clients, there's going to be some guys that have a lot of crop that is going to be overrun. They won't have enough storage capacity, and those areas especially important, I think, to make sales off the combine at these really good, attractive levels. But we should see, I think, probably a little bit more recovery before you get into a mode of trying to hedge or sell ahead of harvest. But you know, it's a tough time of year to really sustain any gains. You can see a rally from now until Labor Day, but after that, it's a very hard time frame to sustain rallies as harvest starts to ramp up.
All right, Brian, thanks so much. Appreciate that. I'm going to come back in just a moment, and then I'll run through our livestock trade as well here on a Tuesday. Come on back. We're talking with Brian Hoops of Midwest Market Solutions. Brian, I always like to check with you. You always have your ear close to the ground when it comes to cash cattle movement out in the plains. Anything going on here so far today or not?
Well, we saw a little bit of movement yesterday, Marlin. Nothing today, but there seems to be a string of cattle that trade almost exclusively on Mondays or early Tuesday morning in the north, and they traded at about 200 yesterday, down maybe steady to down $1 from a week ago. There was some trade in the Southern Plains at 121 to 122, mostly steady with last week. So that's kind of your benchmark, I think, for the rest of the week. We'll be looking for higher prices. Certainly, feedlot's going to be asking higher prices after a big move in the futures yesterday and again this morning. So we have new contract highs in almost all the live cattle contracts. And this, it's a mentality that the cattle futures moving sharply higher. And so if you've done a good job with maybe getting some protection in place, with put options, giving you an opportunity to raise those put option levels to higher prices. I think, it's still a case where risk management is going to be the key this year. We've heard some talk about maybe packers having a tough time finding workers for some of their kill facilities because of vaccines and COVID. So that story hasn't gone away completely. And that's really the one thing that I think could kind of derail this bull market in the cattle.
Yesterday, USDA released their cold storage report, and it really didn't budge very much from what we had the previous month when you look at the month-to-month change in the beef and the pork. So on cold storage on the frozen red meat supplies, just less than a 1% increase. It was just basically unchanged. The beef, less than a 1% decrease. The pork, less than a 1% increase. However, all of the supplies were down from what we had a year ago. Let's look at our current futures trade on the live cattle board right now and our quotes from bar chart. You have October live cattle 65 higher at 132.60 this morning. The feeder cattle market seems to be shrugging off the move in the corn, but it is easing back. September now 57 cents higher at 167.87. So we've come back over $1 off of our earlier high this morning. And in the lean hogs, right now you have October 55 lower. It was higher. Now we flipped around lower, 55 cents at 86.92, and all the other months about 55 to 75 cents lower right now. Well, Brian, thanks for the time this morning. Brian Hoops, Midwest Market Solutions. Janet, back to you.